Have you ever wondered if your investments could make the world a better place? In today's video, we'll explore the power of socially responsible investing and how you can align your financial goals with your values. Whether you care about the environment, social justice, or good governance, this guide will show you how to invest in a way that benefits both your wallet and the world. Socially responsible investing, SRI, also known as ethical investing or impact investing, is an investment strategy that considers not only financial returns, but also the social and environmental impact of investments. It involves investing in companies that align with your values and contribute positively to society. Why invest socially responsible? Investing socially responsibly aligns your financial decisions with your personal values, allowing you to support causes you care about, such as environmental sustainability, social justice, or corporate governance. By choosing companies that prioritize these areas, such as those working to reduce carbon footprints or promote diversity and equality, you contribute to a more sustainable and equitable future. Moreover, research indicates that socially responsible investment, SRI funds, can perform as well as or even better than traditional funds over the long term. Studies, including one by Morgan Stanley, have shown that companies with strong environmental, social, and governance (ESG) practices tend to be better managed, more resilient, and less exposed to risks, which enhances their long-term profitability. For instance, during periods of market volatility, sustainable equity funds outperformed traditional ones, and this trend has strengthened in recent years, proving that ethical investing can yield positive financial returns as well. In addition to potential financial gains, socially responsible investing allows individuals to play an active role in promoting positive societal change. Supporting businesses that focus on renewable energy, fair labor practices, and good governance contributes to combating climate change, supporting marginalized communities, and fostering a more just society. This makes socially responsible investing not just an ethical choice, but a proactive way to address pressing global issues like environmental degradation and social inequality, while also securing long-term financial success. How to invest socially responsible. The first step in socially responsible investing is to research and identify funds that align with your values and financial goals. Key factors to consider include the environmental, social, and governance (ESG) focus of the funds. Look for funds that invest in companies prioritizing sustainability, such as renewable energy, waste management, and sustainable agriculture to support environmental conservation. For a social focus, consider funds that back companies with strong human rights records, diversity initiatives, equal pay practices, and community development efforts. Companies known for their commitment to corporate social responsibility, CSR, are often highlighted in socially responsible funds. Additionally, evaluate the governance of potential investments, seeking companies with strong corporate governance, transparency, and ethical standards, as these tend to have better long-term success and lower risk. Another critical factor is the fees associated with the funds. While some socially responsible funds may charge slightly higher fees due to active management, it is important to compare these costs to ensure they are competitive with traditional funds, as high fees can erode long-term returns. Diversification is also key to managing risk, so consider spreading your investments across different SRI sectors and asset classes, such as renewable energy, healthcare, technology, and consumer goods, to avoid the risk of overexposure to any single sector. Finally, it's important to regularly monitor the performance of your investments, just as you would with traditional ones. Market conditions can change, and it's crucial to adjust your portfolio as needed to stay aligned with your goals and the evolving market dynamics, ensuring both financial and social impact. Popular SRI investment options, mutual funds, exchange-traded funds, ETFs, and individual stocks are popular options for socially responsible investing. each offering different advantages depending on an investor's goals and preferences. Mutual funds pool money from multiple investors to create a diversified portfolio of stocks, bonds, or other securities, often focusing on socially responsible companies. These funds are actively managed by professional fund managers, making them a convenient choice for investors who may not have the time or expertise to manage their own portfolios. Additionally, mutual funds provide broad diversification, which can help mitigate risk while aligning investments with personal values. ETFs, on the other hand, trade on stock exchanges like individual stocks, giving investors more flexibility as they can buy and sell shares throughout the trading day. ETFs that focus on socially responsible investing are a cost-effective option, often with lower expense ratios compared to mutual funds, allowing investors to diversify their portfolios with lower fees. For those who prefer a more hands-on approach, investing in individual stocks allows direct ownership of shares in companies that align with one's values, such as those with strong environmental or social practices. However, investing in individual stocks requires more time and research, as it can be more volatile and riskier than mutual funds or ETFs. Careful evaluation of each company's practices, financial health, and long-term potential is necessary when selecting individual stocks. Ultimately, the choice between mutual funds, ETFs, and individual stocks depends on an investor's level of involvement, financial goals, and comfort with risk, all while maintaining alignment with their values and priorities. Key considerations. While socially responsible investment, SRI funds can offer competitive returns, it's important to acknowledge that there may be periods when they underperform compared to traditional funds. Market conditions, sector performance, and individual fund strategies all influence returns, so it's essential to maintain realistic expectations and focus on the long-term benefits of socially responsible investing, such as positive societal impact. Additionally, understanding the specific screening criteria used by SRI funds is crucial. Different funds may adopt varying methods for selecting companies, which can significantly affect the types of businesses included in their portfolios. To ensure the fund aligns with your values and investment goals, familiarize yourself with the screening process used by the fund. Another key consideration is the risk of greenwashing, a practice where funds falsely claim to be socially responsible without rigorous screening processes. This can mislead investors about the environmental or social impact of their investments. To avoid falling victim to greenwashing, it's important to conduct thorough research and verify the fund's claims through independent sources or third-party evaluations. Greenwashing can undermine the integrity of socially responsible investing, so it's essential to ensure that the funds you invest in genuinely reflect your values. Ultimately, balancing the potential for returns with the ethical and social impact you want to achieve requires careful research, realistic expectations, and vigilance to avoid misleading practices like greenwashing. Investing in socially responsible funds is not only a way to align your investments with your values, but also an opportunity to contribute positively to society and the environment. By understanding the reasons for socially responsible investing, exploring different investment options, and considering key factors, you can create a portfolio that reflects your beliefs and supports a more sustainable and equitable future. Remember, socially responsible investing is a long-term strategy. It's essential to stay informed, remain patient, and be proactive in aligning your investments with your values while working toward both financial and social goals. As the world increasingly emphasizes corporate responsibility and sustainability, socially responsible investing will continue to grow, offering investors a meaningful way to make a difference. Ready to take control of your financial future while making a positive impact? Start your journey with socially responsible investing today. Don't forget to like, subscribe, and hit the bell for more tips on smart investing that aligns with your values. Let us know in the comments how you plan to invest responsibly.